Hello and welcome to the IG Week Ahead with me, Angela Barnes. You're watching IGTV and we are going ahead to the 4th of September 2023 to see what's on the economic and corporate agenda. So let's start with Monday and we'll be getting the latest trade balance from Germany. Also, then, moving on to Tuesday, nothing else for you on Monday. On Tuesday, 5th of September, we'll then get the UK BRC retail sales monitor data through. And then also on Tuesday, we have the China Caixin Services PMI data. Well, the Caixin China General Services PMI unexpectedly rose to 54.1 in July from June's 5-month low of 53.9, exceeding forecasts of 52.5. Well, the reading pointed to the 7th straight month of expansion in services activity. Well, also, we will be in, from Australia, a rate decision is due. The central bank is it did nothing at its last meeting and left rates unchanged for 2 meetings in a row at 4.10%. And economists think it may do so again this time around. Well, also the RBA will also make its decision at what will be Governor Philip Lowe's actual last meeting in charge. His 7-year term is ending and he has not been reappointed. His deputy will be taking over later this month. Also, US factory orders due on Tuesday. New orders for manufactured goods in the US increased by 2.3% from May to $592 million in June, which was the most since January 2021. Then Wednesday as well, we'll also get Australia's Q2 GDP growth rate we'll be keeping across. And Canada's trade balance and an interest rate decision from the Bank of Canada is also due. Well, the Bank of Canada paused rates in March and April, but hiked by a 1/4 point at each of its June and July meetings to take its headline overnight interest rate to 5%. The current consensus is that it will hike rates again this time to 5.25%, but it is likely to be the peak, analysts think. Well, on Wednesday, a busy day of economic data from the US with trade balance data due, ISM services PMI, beige book, API crude oil inventories as well. And also today, we just had US non-farm payrolls data through, which showed an actual figure through jobs created of 187,000 for August. And the forecast was actually 170,000. So it was a lot higher than what we had expected and what the markets had expected. Well, Daily FX's Richard Snow has been keeping across this, and he's with us now to summarise how the markets have reacted to that and what to watch out for in the markets next week. Richard, over to you.
Thanks, Angela. We've seen an immediate reaction in the dollar markets trading a little bit lower after the announcement. Markets obviously looking at the 3.8% unemployment rate. As opposed to that slight upward beat on the actual August payrolls figure. So if we are to see a continuation of the dollar sort of easing off in towards the start of next week, my thinking already goes ahead to the RBA interest rate decision, where it is extremely unlikely, according to markets, that we'll get any movement there. And if that is the case, well, then the Aussie dollar or Aussie AUD USD, it looks like it could be due for a bearish continuation. So just taking a look at the Aussie dollar chart, we see that broad bearish trend remaining intact. And if we are to see some sort of a recovery here on the Australian dollar side, given that China has come through with a few more stimulus measures, more targeted measures, we could possibly see Aussie dollar moving slightly higher in towards that Tuesday early morning interest rate decision. So potentially looking for a bearish continuation at better entry levels at the start of next week on Aussie dollar.
Okay, Richard, that's brilliant. Thank you very much for joining us and sharing your insight with us on that. Okay, moving on now as well, because on Thursday, we'll also have Australia's trade balance, and as well, we'll have a trade balance from China. We'll also be getting the UK Halifax house price index data through. And also we'll be getting Q2 GDP final figures for the Eurozone. Now, in the second quarter of 2023, real GDP in the Eurozone grew by 0.3% on a quarterly basis, the sharpest expansion since the second quarter of 2022, and by 0.6% on an annual basis, according to flash estimates. Well, this followed quarterly growth of 0.1% in the first quarter, so we'll be keeping across that. Also, on Friday, now moving on to the 8th of September, we'll also get Q2 GDP final figures from Japan. We'll also have more data from the US, wholesale inventories, and the latest Baker Hughes oil rig count data as well. And then also, so on the corporate front, nothing to report on Monday. Tuesday, the 5th of September, though, we'll have Q1 earnings from Ashstead. Well, if we just pull up the Ashstead price chart here, let's just take a look. Okay, so its shares are up about 0.38% at the moment. Shares in the plant and equipment hire specialists, are really, though, yet to recapture their peak of 2021, but up by a quarter over the past year. And Ashstead spent all of its fiscal year to April raising its sales growth and earnings guidance, which has helped boost its stock. So we will see if its latest update continues to cheer investors. Well, analysts are currently expecting total sales growth for the year of 13% to $11 billion for the company. Okay, so moving on, Wednesday, 6th of September, we'll also get a trading update from WH Smith. We're also going to be getting a Q1 trading statement from Halfords and full year earnings from Barratt Developments. And then on Thursday, the 7th of September, we're going to have first half results from Vistry and also Direct Line Insurance also updating us with first half results too. Nothing to report on Friday, no corporate updates. Well, Tasty's Tom Sosnoff joins us now from Chicago. Tom, great to see you as always. And I would be very keen to know what you're looking out for next week on the corporate front.
Well, the interesting thing about next week is we're pretty much finally done with earnings. So, earnings have been, I guess they've been the focus of most equity traders for the last couple of weeks. And since we've got through, virtually all of them, I think next week we start to focus on we're coming up on September triple witch, and we're also coming up on next Friday is the roll date for all the September futures, and the open interest is kind of at record levels. So I think next week we're going to get back to kind of very typical third quarter, the kind of the wrap up of essentially the wrap up of Q3 into September triple witching, which tends to be over the years pretty volatile. And so, next week's a 4-day week in the US, and those 4-day weeks have had almost as much movement as the last, set of 5-day weeks. And don't forget, what we're kind of looking for going into triple witching, we haven't had an up triple witching cycle in almost 2 years, up triple witching expiration. So, and I'm speaking like an option trader, but triple witching is when stocks, futures, and futures options all expire. Stock options, futures, and futures options all expire 2 weeks from today. And so I think the unwind going into that triple witch and the fact that most of the triple witching over the last 2 years have been a little bit to the weak side is going to present a little bit more volatility than we've seen in August. And I think next week, your 4-day expected move is going to be pretty much like a 5-day expected move any other time. So we're going to get back to away from earnings and back to trading.
Brilliant. Tom Sosnoff in Chicago there from Tasty. Thank you so much for your insight. Okay, well, that's it from us. Thank you for watching IGTV and thank you for staying tuned for your week ahead. We'll see you again soon. Have a nice weekend.